does it matter? I mean, the direction seems to be clear. Does it matter fundamentally whether it's 2 or 3 this year?
Not necessarily. I think the direction, as you say, is what matters. It's fiscal policy leading the way. Monetary policy is now following. I agree with Mark on the shift in tone from the policy impact on markets. March will be on the table. It will be discussed. We don't think it'll happen. We think most of the impulse in inflation that we just saw the other day was about energy and commodities, not so much about wages and domestic prices. So I think it'll be discussed. I think the Fed will skip March, and then depending on the timing of fiscal policy, you'll get 2 or you'll get 3. Markets seem to be okay with that. I just don't think you get the first one in March.
Michael, is it fiscal policy leading the way? In her testimony, Janet Yellen specifically said, we're not taking that into account, whatever the Trump administration might do. And the Trump administration, in fairness, has not really come up with a fiscal plan yet. So is the Fed anticipating?
Well, I think what they're saying is, at least relative to history, they're not the only game in town anymore. And with the economy at full employment and the output gap closed, if you do get a fiscal policy expansion, it'll make monetary policy more regular. So I think it's the timing of that matters. The Fed will follow on the back of fiscal expansion with more rate hikes, but yes, the timing and the details of that matter. I'm not sure the Fed feels a lot of urgency to move ahead of that without knowing what's coming.
Mark, if I gave you the crystal ball for this week and I told you that the data was going to be absolutely solid and there would be a hawkish tilt from pretty much every single Fed speaker that was rolled out throughout the week, would you have believed that the dollar would be pretty much dead flat over the last 5 trading days?
Yeah, I think so. I think maybe there would have been a little bit of a more upward bias from the U.S. dollar, but I think what you have to think about here is we had a really solid inflation number, and so what we're seeing is the Fed is not going to front-run fiscal stimulus, and now you are seeing an uptick in domestic prices and general inflationary levels, which is seeing U.S. real yields start to fall. So I think what we saw is we got the Trump trade priced in immediately. FX markets tend to front-run most other markets, so we saw a huge surge in the dollar relative to most of the G3 or the lower-yielding currencies within the G10. And so what I think we're starting to see is that positioning is very lopsided. If you look at the correlation of all the major currencies relative to the U.S. dollar in the trade-weighted sense, you're basically looking at a one-sided trade where all the currencies are moving with or without the dollar. So essentially the direction of the dollar is going to hinge on what outlook we get on fiscal. And so I think what people are focused on is there's been a little bit of a backlash against border adjustment tax. There hasn't been a lot of discussion about HIA reform, and we haven't seen too much discussion outside the last couple of weeks where people are talking about trade imbalances or the international value of currency. So all those things kind of keep us range bound. What I think more of an impulse for markets to think about, what does border adjustments do? So I think that's really going to be the focus for the next 3 months, is what are those goodies that are going to impact currencies that we get from a fiscal stimulus? And I think that's really going to set the tone.
Well, Michael, a couple of points that Mark just made, and I want to pick up on the first one. It's the idea that the Fed won't front-run fiscal stimulus. So I just wonder how they respond to it, full stop. Coming into this year, the assumption was that we'd get a push of fiscal stimulus and the Fed would react, and maybe they'd have to react strongly. Are we now questioning how that's going to play out?
Well, we are, because we don't know what fiscal stimulus is coming. Trump seems to have one version, the House has a version, and the Senate has a version. And so the composition matters. As Mark mentions, border adjustments would have a very different impact on trade and currencies than would just a general old-fashioned tax cut, right? So on one outcome, you have the deficit widening, tax cuts coming down, fiscal stimulus. On the other, you're trying to reshape the whole corporate tax code. So there's still a lot of details in there that matter, and we don't have more clarity on that.
Hey, Michael, great to have you with us. Good to see you, mate.